Good morning, dear students. Now, welcome to today's class. In our today's class, we'll discuss a new chapter that is financial statement for sole proprietorship. So, let's start this chapter. So, what is financial statement? The financial statement are the statements prepared at the end of the accounting period. That means, at the end of the accounting period, it means on 31st March to determine the financial performance. To determine the financial performance of the enterprise of the business, that is profit earned or losses incurred during the accounting period, and also the financial position of the business as on the date. That means the financial statement will have to provide you the statement of profit and losses during an accounting period, and also provides the information of financial position of the business. That means how much assets and liabilities the business have. So financial statements includes first one, that is trading profit and loss account, and second one, that is balance sheet. So financial statement are the end product of the accounting process prepared from the trial balance. They are prepared to know the profit earned or losses incurred by the business during an accounting period. It is known for trading profit and loss account. And the second thing that is the assets owned and liabilities owed as on date, that is financial position by preparing the balance sheet. So, what is financial statement? That means in financial statement includes trading profit and loss account and balance sheet. These two things, these two statement that we prepare to know the exact financial position of the business or to know the conditions of profit and losses of an organization. So with the help of trading profit and loss account, we can find out the amount of net profit or net loss, and after preparing this statement of profit and loss account, we'll prepare the balance sheet to know the financial position of the business. So here the reasons for preparing financial statement: to know the amount of profit or losses incurred by the business during an accounting period. It is known from the trading profit and loss account. Here, with the help of trading account, we'll find out the gross profit and gross losses, and after this gross profit and gross losses, we'll transfer this gross profit and gross losses to our profit and loss account, and with the help of profit and loss account, we can find out the net profit and net loss for the concern. And with the help of balance sheet, the assets and liabilities values we can determine, and how much assets being owned and liabilities being owed as on date, that is on 31st March, we can know with the help of balance sheet or with the help of financial statement of the organization. So I hope you all have understood the concept of financial statement, and with statements that we prepare at the end of the year to find out the profit and losses or financial position of the business. So let's proceed towards the trading account. So preparation of trading account is the first stage of preparing final account or financial statement, and it is the financial statement which shows the results of buying and selling of goods or services during an accounting period. So here trading account is our first stage of preparing final account, and it is the financial statement which shows the result of buying and selling of goods and services during an accounting period. So comes towards the features of trading account. The first feature says it is the first stage in preparation of final account of trading entity. Second stage says it records only net sales and direct cost of goods sold. Third says the balances of this account shows gross profit or gross loss, and the fourth point says gross profit or gross loss transferred to profit and loss account. So here trading account is the very first stage of preparing financial statement, which shows the result of buying and selling of goods or services during an accounting period. Here we can find out the buying and selling of goods, and with the help of this trading account we can find out the gross profit and gross losses, and after getting the gross profit and gross losses, we'll transfer this gross profit and gross losses to the statement of profit and loss account to find out the net profit and not net loss. So general listen, first thing, that is it is the very first stage in preparations of final account, and after preparing trading account we can proceed towards the statement of profit and loss account of any organization. So this is what the trading account, and this is the first stage of preparing final account. And point number 2 says it records only net sales and direct cost of goods sold. So the trading accounts records all direct expenses, all net sales or net purchases of the concern or an organization. So it is the records of net sales and direct cost of goods sold or whatever the direct expenses of an organization. There is no record of indirect expenses or indirect incomes under trading account. And the point number 3 says the balances of this account shows gross profit or gross loss. It means the balances, the net result of this trading account to shows gross profit or gross loss. And the 4 point says gross profit or gross loss transfer to profit and loss account. So after find out the amount of gross profit and gross loss, that particular gross profit or gross loss will transfer to statement of profit and loss account to find out the net profit. So this is what our trading account, and now let's proceed towards the format of trading account. So this is what the format of trading account. So format of trading account given below. Here particulars, this is debit side, here particulars, here in credit side. And trading account for the year ended, we will prepare the trading account at the end of the accounting period, that is on 31st March. So proceed towards the first item in your debit side, that is to opening stock. Now what is opening stock? The stock which remains in a business at the beginning of the year, that means as on the opening day of the business after completion of 1 year, that is what the opening stock. That means on 1st April 2020, if there is any stock remains in a business, that stock will be known as opening stock. And proceed towards the second item, that is purchases. Whatever goods and services being purchased by an organization or an entity, that will be recorded here, and will list the returns outward, that means purchase return. If there is any returns towards purchases, then we'll deduct this purchase return from the amount of purchase, and we'll get the amount of net purchase after deducting the purchase return. Then now proceed towards the another item, that is wages and salaries. So wages and salaries is also an direct expenses for an organization, so that will be recorded in a debit side of trading account. And now proceed towards the another expenses, that is to direct expenses. So whether there is any direct expenses, that will be recorded in a trading account. I repeat, all direct expenses or all direct incomes will be recorded in a trading account, and no indirect expenses or no indirect incomes will be recorded in a trading account. So listen carefully, only direct expenses or incomes will be recorded in a trading account. And now proceed towards the carriage inward. This is also direct expenses for an organization. Freight and cartage expenses, factory, electricity and fuel. This is also what are direct expenses or manufacturing expenses. That particular expenses will be recorded in a trading account. So factory or fuel expenses is also what are factory expenses or direct expenses. That's why it is being recorded in a debit side of trading account. And now proceed towards the credit side of trading account. So this is what net by sales. So any sales being done in an accounting year, that will be recorded in your credit side, and will deduct the sales return. So if there is any sales return, that will also deduct from total sales, and will find out the net sales. By scrap sales, if there is any scrap sales remains are being done in an organization, that is the part of income for the concern, and that will be recorded in a credit side of trading account. And proceed towards the another figure, that is closing stock. After the completion of 1 year, if there is any stock remain in an organizations, so that part of the stock is known as what a closing stock, and This closing stock will be transferred in a credit side of trading account. If there is any abnormal losses of stock, that will also be recorded in a credit side of trading account. And the differences of debit and credit, that is either gross profit or gross loss. So if there is uh, excess of credit side more than the debit side, there will be a gross profit, and if there is excess of debit side less than the credit side, then there will be a gross loss. So after this statement or format, I hope you will have understood the concept of trading account. Trading account is a statement which records the total purchases and sales or direct expenses or manufacturing expenses and incomes in an organization. Here in this trading account will not record any indirect expenses or income of the concern. And the main motive of preparing trading account to find out the gross profit or gross loss of an organization. So after discussion of this topic or statement of uh, trading account, we'll hope you all have understood the concept of trading account and the finances statement, that is in the end result of an organization, and about practical concepts we'll discuss in our online classes. So that's all for the time being. I hope you all are well and studying at home. So thank you and God bless you all.